Let's talk a little bit about the chart of accounts. You've probably heard this phrase before. There are 5 different types of accounts that you will use in your accounting for your business. The first 2 show up on the income statement: revenue or income accounts and expense accounts. Now, the income accounts will be all the different kinds of income that you make. You don't need a different account for every sale, but if you have multiple lines of business, say you have a food truck, so you're selling out of your food truck, but you also do a little consulting for other food truck owners or wannabe owners, that I would suggest you do 2 separate accounts for that, so you can differentiate your food truck sales from your consulting revenue. Next, we have expense accounts that show up on the income statement or profit and loss statement. Now, this one, you can create too many expense accounts. You really want just the right number to capture the information appropriately. So you probably need a payroll account, and there can be sub-accounts. Underneath that, you may have wages, benefits, taxes. You probably need an occupancy account that will have rent, insurance, utilities, perhaps. And you probably need another set of accounts for advertising, any general and administrative, office expenses, supplies, things like that. If you're a small business, think about setting up the number of accounts so that your income statement or P&L can be printed on one page. Anything more than that is probably overkill. And pro tip here, look at your tax return for an idea of what accounts you need, because they will also lump things into categories. And by mirroring those categories, it will make your tax prep so much easier. Now we have 3 types of accounts on the balance sheet. We have asset accounts, we have liability accounts, and we have equity accounts. So for the asset accounts, for each bank account, you're going to want one of these, a separate asset for each bank account. You also may have accounts receivable, which is what people owe to you. And there may be other things like equipment, trucks, investments, real estate that may be on your asset list. For your liabilities, each loan, you're going to want to have a separate account. You may also have an accounts payable, which is the money that you owe to your vendors. You may have some payroll taxes due or 401k contributions due, some things that you collect periodically, and then maybe you pay your insurance or 401k monthly. So there may be holding accounts for things like that. And then finally, you'll have equity accounts, the owner's contribution, owner's draw, any other investors that have invested in your business, to keep track of what's been invested and what's been paid out to investors. And then there's finally an equity account called retained earnings. And this is the sum of all of your profit and losses for the lifetime of your business. So if you have any questions about these, please feel free to reach out. I'm happy to answer any questions. Thanks for watching. I'll see you next time.